Well, greetings, my beloved clients and friends. I understand that I was informed that not everyone feels comfortable with terms of endearment. So, love you all. I just can't say it to you all. But anyways, so today we talked about 10 baggers last time, and today I want to give you an example of a company that we bought and kind of peel the curtain back and go through the motions of why we decided to buy this company. And the company that we're going to be talking about is called ArcLight Clean Transition Corporation. Symbol is ACTC. Many of you have in your portfolio, and you might have gotten a book like this probably this week to vote the proxy. And so I thought it was timely to explain what this company is, what they do, and why we bought them. So ArcLight Clean Transition was called a SPAC, a special purpose acquisition vehicle. And so they raised capital to buy a company. And obviously in the clean transition kind of industry. So after they raised the capital, they identified the company, which was Proterra, that they wanted to acquire. And once they identified that company, we liked what they were buying. And at that point, we invested in ACTC. So they're in the process of merging with Proterra, and then the stock will be called Proterra. And so I want to tell you about why we bought it, what we like about Proterra, what they do, and our investment decision. So if we go to page 193 of the prospectus and proxy statement, it says here, Proterra's mission is to advance electric vehicle technology to deliver the world's best performing commercial vehicles. So they are in the business of commercial vehicles. Think big buses. That's one of their big target markets. So they say they're at the forefront of this revolution with an integrated business model focused on providing end-to-end solutions that enable commercial vehicle electrification. So that's what they're trying to do, is electrify these big fleets. So their customers are usually large municipalities, like the city of Los Angeles or Chicago, and I'll name some here that are actually their customers. And they've been in business for since 2010, and they're the leader in the industry. They have 50% market share of the electric commercial vehicle market. Now it's small because most of them are diesel, but the interesting thing is that many of them have mandates to electrify, right? So they have this real strong tailwind. There's government funding for these projects, and when the orders come in, they're usually very large orders. So they have three business segments. One is called Proterra Powered, and what they do is they'll take a commercial vehicle that's diesel, for example. They'll pull out that engine and transmission, swap in an electric battery and an electric motor and a battery pack, and they convert it to electric. That's one of their business segments. The second one is Proterra Transit, which they make buses from the ground up. They have a product, and I'll show you a picture of one on page 203. So here is their bus on page 203 that they make. Okay, and so their battery pack looks like this. This is the one that would swap in to an existing vehicle. And so the third segment of their business is called Proterra Energy. And what they do is they will provide the charging stations for that fleet. So it's an end-to-end solution. And here's a picture of their charging stations right there. There's the charger, and then there's the stations, right? So they could go to a school district or a city or a county, and give them all the new vehicles or retrofit their existing vehicles and give them the charging station. So that's their business model. Okay. And I think it, with everything that's going on in the electrification of transportation, it's a great business to be in. It says here, according to a 2018 research study of more than 3,800 fleet and procurement managers, 47% already had fleet electrification goals for 2020 or beyond, and said that the top barriers to adoption were price, lack of charging infrastructure, and lack of product availability. So here they are when these people need to transition to electrified fleet. They have the solution, and the government has the money. It's a great business to be in. And just to give you an idea, they come in and not only meet that mandate, but save them costs, incredible cost savings, not only in fuel, but also in maintenance, because an electric vehicle has much fewer parts. It says here, as a result, relative to diesel's low fuel efficiency of less than 5 miles per gallon, our electric vehicles can exceed 20 miles per gallon equivalent, generating significant cost savings. By implementing these efficient designs, maintenance costs can also be materially reduced, given fewer moving parts, no need for oil changes, less frequent brake replacements. Okay, and they already have significant manufacturing capacity. To give you an idea of their existing customer base, in Proterra Powered, they have 5 customers. That might not sound like a lot, but when you think about the customers they have, they're the 5 biggest players. They have Thomas Built Buses, Freightliner, Van Hool, Optimal Electric Vehicles, who I haven't heard of, and Komatsu. And these customers serve the school bus, step van, motor coach, double-decker transit bus, shuttle bus, international transit bus, and construction mining markets, respectively. So that'll give you an idea of what they do. Okay, Proterra Transit, they have 133 customers, including municipal transit agencies, corporations, airports, universities, national parks. We have customers represented in 40 states and territories, Washington, D.C., and 2 Canadian provinces. So here's a picture of where they have customers in the United States. And you can see the dots there as far as where they have customers. So they're on both coasts and in the middle of the country as well, and in Canada. And then Proterra Energy, they have installed approximately 446 megawatts of charging infrastructure across more than 470 charge points throughout North America. Our largest charging customers include Edmonton Transit Service, LA Department of Transportation, Chicago Transit Authority, University of Georgia, and Reno's Regional Transportation Commission. Okay, so it's a huge market. It says here, as of December 31, 2020, there are in total more than 25,000 buses in operation at fleets that are mandated to convert to 100% zero emission. These fleets, including fleets in the state of California, cities of New York, Chicago, Seattle, among others. So it's a huge market. They have 50% market share in that business, and they're ready. And the money also is there. And let me show you that part. Oh, here's something interesting. Their drivetrains have significant advantages over traditional powertrains in weight and serviceability. Our motor weighs 90 kilograms compared to over 800 kilograms for a typical diesel engine, and may be removed in 4 hours compared to 12 hours for the standard diesel engine. Okay, so they have 2 battery facilities. They have a 34,000 square foot facility in Burlingame, California. And in September 2020, they opened their second battery line with 50,000 enclosed space in the city of Industry. They have 2 bus facilities, 157,000 square foot facility in city of Industry, and a 209,000 square foot facility in Greenville, North Carolina. Okay, so here's where their customers get their money. Passed in December 2015, the FAST Act, which stands for Fixing America's Surface Transportation, allocated over $305 billion for highway transit and vehicle safety programs for a 5-year period ended September 30, 2020, and the FAST Act was recently extended through September 30, 2021, and we expect it to continue to be extended. The FAST Act reinstated a competitive bus and bus facilities infrastructure investment program, which will grow from $268 million in 2016 to $415 million, and upsized another $180 million for fiscal year 2020. So that is the market. We like that industry and we like their position in the industry. So then we had to look at, well, at what price would it make sense to buy this company? So when we looked at the financials, it looked pretty attractive. So here's what we're looking at. So in this capital raise, ACTC raised this capital and infused this capital into Proterra. They're going to get between $370 million and $647 million in cash. It depends on how many of those issued shares get redeemed. So those are the two extremes. It'll be somewhere in there, close to $500 million in cash, which will fund their growth because they have large growth goals over the next 5 years. So in the last 3 years, their revenue has grown significantly. I think last year was 190 million was their revenue. And so when they do their projections over the next 5 years, this is what we looked at and where we decided that it looked like a good buy. This is on page 117, and this shows their next 5-year pro forma. And looking at the numbers and the market, they seem to be quite reasonable. So they're expecting to grow revenue to 246 million in 2021, 439 in 2022, 838 in 2023, 1.4 billion in 2024, and in 2025, 2.5 billion. Okay, so that's a 10x growth in sales. And the first 2 years, they're forecasting a loss, ending in 2025, turning profitable in 2023, and they're forecasting a profit of 500 million in 2025. So if we look at those revenue forecasts, not only does it seem like it makes sense, but they are based on backlog and orders from current customers and pipeline of potential new customers. So they already have a pipeline of orders. And so if we look at that 2025 number, the gross margin improvements driven by expected cost reductions, including cost reduction on Proterra's current product on-ramp and increased investment, research, and development. That's what they're using the money for. So they relied on a number of factors when they came up with these numbers. They said acceleration of adoption of Proterra Transit based on recent bid activity, leading to delivery of approximately 1,000 buses in 2025. So that's what they're shooting for, 1,000 buses in 2025. And we saw the number of buses that need to be retrofitted. So 1,000 seems like an easily doable number considering their facilities and everything. And then increased electrification of new commercial vehicles based on recent bidding activity, leading to electrification of approximately 22,500 vehicles in 2025. So those numbers don't seem like they're shooting for the moon. They seem to be reasonable. And third-party forecast for industry growth and market penetration. So they hired third parties to kind of get an idea of verify their numbers to make sure what they're seeing was verifiable. So let's look at that 2025 number. So Today they're at a market cap of 1.6 billion. Okay, and if I look at that 2025 number of 2.5 billion in sales and 500 million in earnings, we'll just go to the bottom line. 500 million earnings, and let's say they trade at 20 times earnings, which is pretty reasonable. That would be a $10 billion market cap, which would represent 4 times sales. So those numbers are pretty mundane. 4 times sales, 20 times earnings. So if they hit that number and they're worth 10 billion in 5 years, and we're buying them today at 1.6 billion, that's a 6x return in 5 years. That's a 37% annualized return from here to there. So when I looked at that, and I looked at the industry and the dynamics of, hey, electrification is happening, seemed like a good investment. So what do we do now? One, vote in favor of this merger to go through with the proxy. And number two, they're going to give us a report card every quarter to see if they're indeed on track to hit these numbers. So once a quarter, I'm going to get on that call, and if it sounds like they're on track to hit these numbers here, we're just going to hold on and let them do their thing. If it starts to appear that, you know what, they're not even going to come close to hitting these numbers, then we realize, hey, maybe it wasn't such a good investment, and we we cut the line. But that's kind of what we do in a nutshell. We read books like this, and we analyze the market and the industry and the leadership and their vision, and then we look at the financials and we see, well, so what could this thing be worth in 5 to 10 years? And if it is, what would be our return? And if it meets our return guidelines, then that's something that we'd buy and hold it 5 years and check in on them every quarter when they do their quarterly report. So that's an example of what we do for you. Hope you guys have a great weekend.